Hey everyone, Couch Investor back to another video for today. So, some breaking news with regards to SoFi. Apparently, the company is laying off around 7% of their workforce. Now, there have been talks already, chatter around social media platforms as to why this is happening. Is it because the company is slowing down and so they might not reach profitability in 2024? Of course, Q4 already happened. For those of you that still think that this can affect the upcoming earnings report, it cannot. It will only affect what happens in 2024. So, we're going to discuss all of that in this video, but I first want to start with some new price targets, coverage initiations for SoFi that happened actually this week. So the first one is from BMO Capital. They initiated coverage with a $9 price target, and the analyst is James Fotheringham, a pretty stable, strong analyst. Barclays also reiterated a $10 price target, and I believe Deutsche Bank increased their price target by just 2%. So again, the more analysts that cover SoFi, in my opinion, the better. So you get many points of views, bearish, bullish, and then you can see what sticks, right? If you agree, you disagree, it tests your own thesis. It's always better to have more analysts than to have less of them. Remember, a year or two ago, we didn't really have that many analysts covering SoFi, and so we're not getting as many good questions during the earnings call. We're not getting as many of notes as well to see what the sentiment is around the stock. Some might say this is about manipulation of stocks, going up, going down. Maybe, but the more analysts, the more info that gets out there, the more info you as a retail investor can get as well. So don't be angry to see more and more analysts covering SoFi, bearish or bullish. Now, before I continue, if you want to support this channel, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to full.com/couchinvestor. Thank you very much. So, yesterday night or morning, wherever you are, there's been some posts circulating on X. So Tanner here posted that a sizable round of recent large layoffs seems to be taking place at SoFi, according to multiple employees posting on LinkedIn looking for new job opportunities. The post will pop up on the screen. These are management roles in lending, UX researchers, software engineers, etc. Seems like a broad cut across the board with no signs of anything yet from Galileo. Then we had this post pop up. So someone asked how many people laid off. Someone answered, seems like OP mentioned 7%. SoFi has 4,200 employees per Yahoo, so around 300. If it's 7% of engineering population, then maybe close to 100, assuming 1/3 population is engineering. Another one answered here, think it was 7% of total workforce and 20% of engineering. Of course, remains to be seen until the company actually confirms those claims. Now, me being as lucky as always with my timing, maybe when that video goes out, it will already have been confirmed or denied. Could be, but I'm just here to inform you of what we have been hearing right now. Now, remember what happened with Robinhood. Robinhood last year, they also laid off 7% of their staff in a fresh round of job cuts. Now, of course, with Robinhood, this was the third layoff since 2022, after the company had shed 9% of its workforce in April 2022, and then later another 23% of the staff in August 2022. But very important here, and I'll make the link to SoFi, the news followed Robinhood's latest acquisition of credit card platform X1. And so we know that with the, let's say, merger of operations with Galileo, Technisys, SoFi as a whole, maybe that integration is over. They're seeing that, well, right now the systems are working better than before, and so maybe this is just cutting the excess fat, as they say. Of course, it's not great for the employee getting laid off, not great, but I mean, we've seen this actually since the start of 2024. We've seen this across the board. More and more companies doing even more layoffs. I mean, more recently, we've seen Unity lay off 25% of their workforce. Maybe I'll do a video about that later on. But to me, this is more about them managing to do more with less. That's just my opinion. And we have Brad here from Stock Market Nerd newsletter saying basically a bit of the same. So seeing reports of a 7% SoFi layoff involving the engineering department circulating. My guess for the reasoning is a mix of 1. Eliminating redundant roles stemming from the Technisys merger and acquisition. 2. Work in AI eliminating the need for some roles like we're seeing with others such as Duolingo. And 3. Maybe correcting any overhiring from the era of free money and stimulus. I can't agree more. I mean, we haven't really seen SoFi lay off many of the employees, right? We haven't seen SoFi restructuring the company. So maybe right now they're seeing, look, going into 2024, we also promised to be profitable in 2024. So rather than wait throughout the year, maybe let's start the year with a 7% cut and then we go from there. Now remember, the technology platform is the one that will drive the growth in 2024. So to me, this doesn't really come as a surprise. Remember the last video, we talked about that as well. And so if you needed a small reminder, if we go back to the earnings call, they talk here about the tech platform where they delivered record net revenue of $90 million in the quarter. By the way, the tech platform in 2023 didn't perform as well as we would want to, but they promised 2024 to be a much better year. So that was up 6% year over year and 3% sequentially. Annual revenue growth was driven primarily by Galileo account growth to $137 million in total. And here it comes. The segment delivered a contribution profit of $32 million, representing a 36% margin, up significantly quarter over quarter as we leverage investment made to integrate Galileo and Technisys and to position the segment for higher rates of diversified durable growth going forward. We expect the technology platform segment revenue to see an acceleration in Q4 with ongoing strong margins as we leverage prior investments. So I'm just putting 1 plus 1 here together. We get to 2. Some people say 1 plus 1 equals 3. But then again, we live in strange times. But if you read this, if you read what they mentioned during the earnings call, then now we hear about these layoffs in those segments. Maybe it makes sense. Maybe it makes sense. Of course, it's never great to hear about layoffs. But from a business standpoint, from a profitability standpoint, growth standpoint, it does make sense. So, yeah, we might see this as something bullish. The market currently reaction is pretty muted. We can see this change throughout the day. Remember, there's also CPI report, so that might have an effect on the stock as well. But it won't be that long until we get the earnings report, earnings call, and most of our questions will be answered. Now, let's head back and quickly look at the graph. Of course, since the last video, which I think a lot of you have watched, nothing really much has changed. Last week, big red candle. Of course, right now we are still sitting under the 50-day moving average. Currently, looks a bit like a bullish week. We still have 3 days to go. 200-day moving average sits at $7.85 with RSI being pretty neutral. And this is an area where in the past we have stayed there for a couple of weeks. As you can see here, the summer of 2023, the area around $8 has usually been an area of stabilization. And then going into the earnings report, of course, I do expect them to beat the expectations, but as we've seen in the past, the market will do what the market will do. Double beat, triple beat, stock goes up one day, and then the next couple of days, it goes down. Okay. To me, as long as the business performs, as long as the fundamentals look pretty positive to me, I'll be happy. I don't really care if the stock isn't at $20 the next day or this year or whatnot, because remember, you're investing in the business for the long term. So everyone that's still saying, oh, I want this stock at 15 right now, I want this stock at 20 right now, why? Do you want to sell this company already? Because if that's the case, you can trade it and you can make a lot of money. Just doesn't make any sense. Understand that in the long run, we're all in it to actually make some money. But if you invest in a business, you want the business to do better, not just the stock. The stock usually has to represent what the business is doing. With SoFi, right now, the business is doing great, but for the stock to go higher and higher and higher, it has to provide signs of extreme profitability going forward. And with that, we still have some ways to go. So that will be it for this video. These are my thoughts with regards to the layoffs news. Of course, we're going to wait for full confirmation from the company. Until that happens, expect a muted reaction from the market. Depending on when you're watching this video, things can change. Share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. I'll see you all in the next one. Bye bye.